Hey, you guys, Jim here. It's about 8 o'clock my time on June the 11th. I want to show you sort of kind of some of the stuff I look at behind the scene. This is not exactly what I monitor on a different computer on the other side of the office, but this is something that I want to set up for you guys so you can kind of understand a little bit more about, especially about price targets and how I sort of try to match up price targets with my zones of strength and weakness and come up with the best guesstimate. This isn't like Fibonacci and things like that, where people are coming up with their exact price forecast that they think is most relevant. I'm constantly doing this dance where I'm trying to forecast forward into the future, but I'm also watching the market participants in real time, doing what I talk about, tracking the elephant's footprints. And elephant, it can be one person that's has a lot of size in the market, or it could be collectively, a bunch of apes. Apes could show up as an elephant because, collectively, you guys pooling your money together, you can leave footprints just like, one of the big guys. So anyway, what I'm doing is I'm trying to track things in real time, and irrespective of what my predicted forecast might be moving forward, if I see new data that's fighting against the existing data, then I have to adjust my price targets. The existing data doesn't go away. So here's a good example. We'll use this in real time today. So these vertical lines, and I'll remove these in a minute. I never have these on my setup. So on the other side of the office. So what I'm doing basically is taking data and trying to display it visually, both for myself and for you guys. So these vertical lines represent what would be called like a bullseye. So when I say zone of strength into 945, like right here, so you can read this into 945, that's my time. This is sort of a bullseye. When markets are highly emotional, like they were a couple of weeks back, you guys remember how some of the price reversals only missed my zones of strength and weakness by 2 minutes. I've seen the model hit before to the exact minute, 3 different turning points up and down during the day. So literally it would be like if at the opening bell during this day, it was calling for a low into this timestamp, and it would hit exactly that would be 9:15, and then it would hit exactly here, and then it might hit exactly here, and then this might be off by 5 minutes. So I've actually seen that happen, but it takes a really highly emotional stock. And then I have to have done all the work and really concentrated, as opposed to, just trying to get a general sense about the market. Now, when I'm trying to keep up with multiple markets, you'll see once I start to get my forecast built back up for crude oil and gold and all the other markets that if you're a Global Pro subscriber, the markets you have access to, you'll see that, when I focus in one area, it takes a little bit of accuracy away from another area. So what I'll do is I'll sort of back up a little bit, and I'll just say in a generic sense, this is a day that looks bullish, as opposed to giving timestamps on a specific day. I might even say this is a week that's bullish. I might give price levels where I want to try to sell a breakout because the model is considering it's going to be, or predicting it's going to be a false breakout, or I want to buy a break of like a head and shoulders top, and I want to buy the neckline, which would look like the counterintuitive thing to do based on technical analysis. But if my model is bullish and has sort of that trampoline buy sitting underneath the market, you might see me, just in a generic forecast, say the model will be accumulating at this price level during this week. Right. So if I want to really be highly accurate, like I'm trying to be for AMC, my other forecast will not necessarily suffer as far as accuracy, but it'll be a bigger picture forecast. I won't have that granular deep dive. So, I've told you guys before, I've never done an individual stock for a broad audience. When I had my fund clients and portfolio managers, and by the way, I don't like to bring this up, but they did pay $5,000 a month for a really similar service to what you guys will get as Global Pro. And then even when I switched to retail, it was $499 per month. So, I'm trying to bring in a broad audience, and for some reasons that you'll figure out down the road. I'll make it really obvious. You won't have to guess. But to give that level of granularity, I would normally give the client the opportunity to email me 5 individual stocks, and then sort of behind the scene, because these guys are highly secretive, behind the scene, I would, give them a forecast for those individual stocks. But I never highlighted a single stock in front of an audience before like this. So, clients. Anyway, let's get back to this. This is what things would look like. This would be this exact timestamp that I'm talking about right here. So we already had strength in the open. We had strength in the overnight. Everything's tracking great so far. If it continues to track, we'll have strength into 9:45 a.m. So I'll remove this bullseye. That would be considered a bullseye, and just broaden, out a window. So basically what I do then is I say, okay, what's kind of a logical previous high that I can use as my bottom side of my predicted price window, right? So if the stock trades up into this zone of strength, at a bare minimum, I would expect it to be moving back up to this high, right? So that's why I put the box here. It could also then move up to 47.45, which is vibration. If it's really strong, it could move all the way up to here. Vibration's called vibration for a reason. So usually if you make contact on vibration, you don't go straight up to the next vibration level. You'll flop around. And then more logically, once we move into this area, assuming price even moves up, and when we get this right, I probably will move this to here like that, right? And so then say we vibrate here, this becomes the bottom end of the range. This becomes the top end of the range. Here's our Monday, zone of strength, 7:30 to 9:30. Same thing. I'll remove all of this just to clean things up. And then I'll slowly be moving targets up. Now, if this underperforms or doesn't work at all, then this would need to be moved down to here. This would become the top end of the range of this timestamp. So this is the way it works, you guys. It's a dance. And it's easy for me to do behind the scene by myself and follow along and trade it. When I have to forecast it ahead of time, and especially tweet it out publicly, if this zone of strength either doesn't track properly or underperforms as far as the minimum price targets, then all of this has to be pulled down and adjusted. So anyway, that's kind of the way things work. I just wanted to show you guys what I'm looking at specifically. I also can show you one other thing. Let me show you this trend line. Okay, so this is an important trend line. This is point of origin late in the day on the 28th of May. And you can see this point of contact here before you move up. So it's your typical up, down, up type trend line setup. And then a really nice point of contact there. 2 more really nice points of contact there. Loosely there, and then this is how vibration levels are set up, you guys. So I'm going to share more and more of this stuff with you. It's not rocket science. You do have to know how to draw trend lines. Even if you draw a sloppy trend line, it just means that the vibration level becomes sloppy, but you don't care that much, because just in a generic sense, you just want to sort of know that it's a consolidation period that you need to look for. So what I do is I look for the first clean break. This was not really a break. This was more like support and moving back up. This is your first clean break. So you just shoot your trend line horizontally directly off that point of origin where price breaks the trend line. This sets in place an emotional battleground between bulls and bears. This is just how the markets work based on all 30 years of research. So in technical analysis, when you have a breakdown, they would call this a kiss back, where you kiss back up against a trend line. And then typically, if you're going to move into a downtrend, that's the kiss back is the point of origin where you would sort of move down. It's a lot more common to have vibration. And I talk in terms of this sort of A, B, C, D, E kind of, 5 flops above and below. So in this case, as you come down, and that original break there would be A, up B, down C, up D, down E. Now, Don't confuse this with Elliott waves, ABCDE counts, and corrective legs and things like that. Just in a generic sense, if I only see like an A and a B and a C and the market starts to fall apart, I'm always keeping in mind that vibration level down the road so that if we have a future zone of strength, I know in my mind that we're likely to see contact on that again before we go into a bigger picture, sustained trending decline. So, in the markets, I'm always looking over my shoulder, always assuming that I'm going to be wrong, always assuming I'm going to miss something. And so I'm just constantly trying to figure out, almost like in baseball, try to figure out what you're going to do before you hear the sound of the crack of the bat. And you don't want to be standing there without a game plan. So anyway, that's what's going on. That the more important a trend line. So this trend line is an important trend line, right? You have all these points of origin on this green trend line that I showed you. So the more important a trend line, meaning the more points of contact and the longer it's been intact, the more important vibration tends to be. Whereas some of these vibration levels you see here are much more minor, but they at least give me a guide as far as sort of stair step price action. Okay, so now you guys have an idea of sort of a scaled back version of what I look at on my main computers, and sort of an idea about if this is going to track today, what it would look like if it tracks. Okay, now this is options expiration Friday, obviously, so a lot of games. I'm actually surprised that we've tracked pretty well here early because the games tend to be played in the first couple hours. If this tracks nicely, we're looking really good for a continuation into next week. And again, remember I told you this looks really powerful. I think that depending on how this looks, that we could be more up into this 54.90 retest level first couple hours of trading on Monday. So we'll see. You can see this little green trend line I've drawn. The reason I drew this trend line is you have up, down, higher, high. So that's a confirmed trend line. So we'll just see how the stock acts. 4240 vibration, you can see, has been nice support. So hopefully we'll get some support here on this little pullback that we're in right now, and then we'll move back up, and I'll kind of report back to you guys at that point. As far as Anemoi goes, everything looks pretty good. You can see the hourly velocity continuing to repair itself, meaning that it wants to pull price up to the hourly trigger. The hourly trigger right now is at $48.07. Again, fits in decently with a lot of this type of stuff that we're looking at today. So I like to see that. Yesterday we had this, set of positive divergences in 5-minute velocity. So all of that still looks good. I obviously posted the charts finally, the new charts under your AMC Ape tab. So you can check that out and keep an eye on this. You'll see how everything I just showed you down at that 5-minute level is nesting inside this 60-minute model. And so you see all of these price levels start to fall in line. Again, here's our 54.90 retest. I'd love to see that, Monday morning. If we did see that, then we'd be looking really good here. And then we'll just start to talk about this old price high. If we get above that price high, then, I'll start to talk about where the speed line is in real time. But I'm going to de-emphasize these melt up speed line attacks. I think it really caused a lot of people to, take on a gambling approach. My sense is that there were people that were just piling in during this period here. If they weren't, they wouldn't be so freaked out over this pullback. People over the past several days have been more angry at me than they were here. So we're at a higher pullback low, but yet they're completely spun out as opposed to what they were saying to me here. So that tells me that either they lost money in the options betting on a nearby expiration, or they just, bought more and more on the way down. I don't know. Something's going on. I feel bad when that happens, but don't get over your skis. Everything looks good, but always try to be conservative. Never take any risks that you would regret if you look back a week or a month or a year from now. All right. Good luck, you guys.